As Mangalam said, Dinesh Kumar Khara, Chairman of State Bank of India, joins us now to give us his take on the Reserve Bank announcement. Mr. Khara, thank you very much for finding time for us. What are you expecting now that 0.5% has come? Does your ALCO meet and immediately pass it on in terms of higher lending rates?
Well, of course, I think we'll have to deliberate the various issues which are very important to be captured while deciding the interest rates. So I think, but yes, overall, what I would say is that this 50 basis point hike was almost factored in by the market. And it is more on the lines of what the expectations were. To that extent, market is not surprised. So that's a very welcome move in many respects. And also the fact remains that inflation is a reality in which all of us have to live through now. And with that being the situation, the actions being taken by Reserve Bank of India are being perceived as timely, which eventually should help the economy overall.
So what should a borrower and a depositor be prepared for? Will you be shortly expecting, not just for you, for the entire banking system, higher MCLRs, higher base rates very soon?
See, normally, as you are aware, that as far as MCLR is concerned, it has got various components, and the policy rate being one of the components. So much of it also depends upon the cost of funds for each of the entity. And so those variable factors will actually be influencing the final outcome.
So then give me about the variable factors, the factors that go into the calculation. Will you be hiking deposit rates, any deposit rate, savings, 1 year, 5 year, is anything going up in the system?
We have already done that last
No, but there is an incremental 0.5%. What you did was for previous hike. Will you do anything more because of the current hike?
So we will look into what the deposit flow trajectory is, and based on that, we'll be taking a call. So I don't have those numbers readily with me, and maybe once we sit down and have a very clear analysis in terms of how the deposits are moving, then we'll be taking a call. And also, much of it will also depend upon the demand for the credit offtake. Well, of course, in the given situation when it is being talked about that the capacity utilization has improved from 72% to 74% at the economy level. This actually, it speaks well for as far as the credit offtake is concerned. And we have actually seen that when we look at YOY growth in terms of the credit, we are actually witnessing this kind of a growth. So I think we will be taking a very comprehensive view when we meet, look at all the variables, and then take a call in terms of what will be the outcome in terms of the pricing for the loans as well as for the deposits.
Mr. Khara, I'm not asking you to outguess the ALCO meet or say anything ahead. For the banking system, liquidity is still higher. I mean, if you count the amount of money you'll have packed in the variable rate reverse repo instruments and in SDF, about 5 to 6 lakh crore, the governor himself admitted, is still excess. 5.5 lakh crore is what he said. Given that, will you really be hiking deposit rates when you're putting idle money to in 14-day instruments? Is there a chance that deposit rates will be hiked now?
No, I think if at all that is the kind of a situation, if at all banks are sitting with excess liquidity as of now, and they are not finding adequate deployment opportunities, then perhaps they may not go for increasing the rate. But again, it will actually vary from bank to bank. If at all some of the banks are seeing a decent traction in terms of the credit growth, they might really look in terms of increasing the deposit rates also, so that the resources are available in time, and also they would like to really contact such deposits also for a longer duration also, so that they are insulated from any potential risk for increasing deposit rates. So I think that will be, it will again differ from bank to bank. I mean, what kind of a demand they are seeing.
I agree. Yes, sir. It will differ from bank to bank and also from, I guess, tenor to tenor. Some people may want some tenors of money. I take your point. But for the banking system, you are representing 1/3 of the total funds in the system. Not for SBI. For the system, is it a fair assessment that your deposit rates will not go up immediately, but your lending rates will go? So banks at the moment at least are sitting on better margins.
Yeah, that I agree, because when it comes to our loan book, almost about 75% of the loan book is linked to either MCLR or Repo or external benchmark. So that way, of course, this kind of a rate increase will certainly get passed on by virtue of the linkage of the interest clause with the various such benchmarks. So I think that will be a reality, and of course we have seen that the deposit rates gets recalibrated with a lag, whereas advances loan book gets recalibrated almost
Quickly.
at a very frequent interval. So that is something which you have seen. So that to that extent, in the rising interest rate scenario, it overall augurs well for the banking system.
Will you still have some profits left on the table in spite of the MTM losses you will face? Today, the bond yields went up to 7.55 and now they have come back to 7.5. Any ballpark number you can share in terms of mark-to-market losses, which will eat away whatever you get in margins? Or will you still be on the right side?
Mark-to-market losses also will be a function of how the yield movement would be on, say, on the last day of this quarter.
Yes, of course.
Something we'll have to wait and watch. But nevertheless, it's an effort on the part of the bank to really make the AFS book light as much as possible. And that is something which you have done.
Okay.
And when it comes to AFS and HTM normally will also give us the coupon, which will actually help us in sort of tiding over the losses which might come in the MTN book. That also is a fact. And also, I think at a portfolio level, we should still be better off, because the reason is that in the previous years, we have already provided for all the security receipts, etc., which we're holding in our portfolio. So I think to that extent, we have built a cushion for the possible MTM impact.
Okay, so basically you will still be in the money because of lending rates going up, deposit rates not going up much, and MTM losses getting more or less compensated by the higher yield that your book will earn you. Take your point. Now on loan growth, you began with that saying that loan growth is good. You correctly pointed out that the big statement that came from RBI is that capacity utilization in the system has gone up to 74.5. And the governor also said that in the current quarter, it will be even more than that. And then, of course, we are in a huge current account deficit. All of that indicating that capex will have to come. Will you want to revise up your credit growth forecast?
I think we'll have to wait for a month or two more to really revise the credit growth forecast. But just to ensure that the trends are durable, trends are not one-off. So that is something which we'll have to wait and watch, and then we will be in a position to revise the loan growth targets.
But a very good chance that it will be better than the 11.9, which is the current loan growth of the system.
Yeah, we are hoping for that.
Okay. That's an important takeaway, that both loan growth and margins are going to be better for banks. That would be a big positive. Just one final question. Now on UPI, we can use credit cards. At the moment, only RuPay, but very soon other cards. Do you have to, does it flag off right away? Will you have to do some engineering for it before that becomes, by when can I buy on credit cards on UPI?
I don't think it will involve a very significant upgradation. To my mind, it should be doable with some small tweaks, and hopefully we should be in a position to roll it out very soon.
Okay, we'll have to leave it at that, sir. Thank you very much for giving us your quick thoughts on the Reserve Bank monetary policy. The key takeaway, we